Good morning, YouTube. I want to take a few minutes today and share with you my investments so you get an idea of kind of the breadth and what things I'm thinking about, what things I put money into now, and also one things I consider my you kind of core investments and when I buy those. So let's get started real quick. So first, I was like, most everybody else, and I have a job, and I'm in a 401k, and I started Roth IRA, and in a 401k, you can put things in mutual funds, maybe some index funds. So I'm in mostly index funds in my 401k, all stock index funds, no bonds, no cash, long-term investments. And I also have a Roth IRA that I invest in certain things down below. After that, I got into rental houses. I had a situation where work became a less sure job, and due to that, I wanted to create a little stability on the side, and so I started moving into rentals. I bought rental house from U.S. Bank. I bought the second rental house from HUD. A third rental house was also from a HUD type seller. The fourth one was from the neighbor sold me the house while I was there, and at some point I can go into how I did that. But several different venues where you can get distressed properties, with certain issues that I wanted to, take care of and get a discount on the house. Then I added Lee Summit houses in a different area because I felt like these were overly dependent on certain employers doing well, and I wanted to diversify some. These are more difficult because they're remote. Stocks and ETFs, I consider VIG is Vanguard Index, a growth, like a dividend. It's a dividend index fund ETF. And this is probably one of my core holdings. I would consider the rentals to be core. This one is just what everybody else does. But I haven't changed it, I haven't slowed it down, I haven't stopped it, it just keeps going. I bought Fox A stock, and then when they bought Marvel, I got Disney stock also. So it was probably at that point I got about a 300% gain in these two, but I do not really consider those to be core holdings. Possibly Disney would be, I might like to own that, but I'm not sure. And I'll probably sell the Fox stock after a while. I don't think it's a great stock. I really just haven't sold it because I like to watch Fox sometimes. Walmart is definitely going to be a core holding, but today it's pretty small. Most of my money is not in Walmart stock because I live in the area it is, so I feel like I have a dependency on that Walmart for housing and things anyway, and so it's a small portfolio, and I'm probably going to be increasing this. I am right now. Home Depot is definitely a core. This is one of the stocks I probably have around on a portion of my portfolio around a 1,500% gain, or 15 times. So in my son's education IRA, I think I put 2,000 or 3,000 in there, and now it's worth 15 times that. Coin, I bought that to watch it, and I'm just kind of playing with that. That is a Coinbase, which is related to the crypto stocks. I do not think I will keep Coin long term. One, it doesn't pay a dividend, and two, it doesn't appreciate compared to the actual cryptos itself. And so you look at Bitcoin, you're looking at 6.2% payout with appreciation, as opposed to Coin that this is up maybe 15% with no appreciation. And really, the reason I bought it is because I used money in the Roth IRA that I already had in there to buy that. Riven is an IPO, just trying that out. Now, after I got into these rental houses, I had access to more cash than I had before in my life. And so I have friends that are in business, and we started doing sports closeouts with some of that liquidity that I had. And so this is something that is really kind of core. And, do investments periodically, maybe buy a truckload or a carload of, sports equipment. Maybe they're closing out a warehouse, and I'll buy the rest of the things in the warehouse. And then someone else, sells those for me. Because I was doing this, I wanted to learn about selling online. So I started selling on eBay and Amazon, now a little on Poshmark. And this has gotten to be pretty much core. I'm not sure if I want to do it, if I decide to, wind down some of the things I'm doing, because it's a lot of work. After a while of doing these two, we had access to a lot of merchandise. So I started a soccer store, online and brick and mortar. About 2021, this year, maybe in last year, I got into starting to learn about the crypto space. Blockchain technologies is going to be very transformational. And with all the other companies and things that I'm running, I wanted to understand how to look at crypto technology, understand it, and then leverage it across rentals. How does it apply to a store? How does it apply to sales online? A lot of times there's synergies between, where does rentals and crypto come together? How many people understand both? And the answer is, nobody really does understand both sides. And so what can you do and amplify returns by combining a soccer store and real estate? How do those thinkings go together and give you a different perspective no one else has? So I would say Bitcoin is going to be core, but today it's pretty small. ETH is definitely going to be core, and right now I'm playing with definitely Solana, ADA, the markets, the markets that people are doing smart contracts on: Solana, ADA, Polygon, Polkadot. I'm playing with those. I'll probably end up with a position in those that's similar to what coin was or what coin is. And then SNX is kind of an experiment. It had a high payout of 13.99%. So I wanted to see, what does it feel like to be in that? How does that appreciate over time? What I'm finding really is that the SNX investment here doesn't pay as much as Ethereum does. Even though Ethereum is paying like 5%, SNX is paying like 13.99. This grows. So now I'm at 10% of what my investment was. So I think Ethereum is really a better payout investment long term than SNX is. So I'm not sure if this is probably something I'll short and understand. This Solana I'm actually staking from Ledger Nano X. The first time I staked, I like the Solana staking because you can keep your crypto on your Ledger Nano X and stake at the same time, which gives you no risk from putting your things on the market or on a certain platform like Celsius or Nexo IO. But my goal is to end up with crypto as a whole as a core investment that probably brings me as much profit as the closeout business, or maybe it's Home Depot, maybe more than Home Depot does from a payout standpoint. Now, I made a video on this Home Depot, and the highest profit, one of the highest profit investments I've had. The video says my return is 1,200%. That was when the stock was at 300, low 300, and now it's at low 400. So you've got another 25% appreciation, which, because I'm at 1,200% gain, 25% is an additional probably 1,500% total return, which is huge. And one of the things I'll introduce you to here in this video, so you understand is you do not end up balanced in a portfolio that is making you wealthy. Okay, so let me give you an example. I am very heavily into the rental side, okay, because the rentals is what grew. Now, people would say rebalance to sell your rentals down, but if you look at it, what you really don't want to do is you don't want to sell your core investments, no matter how big they go, because at 1,200% gain, I gained another 300% in a year based on my investment, right? And so I'm not going to sell this as it goes up. I'm just going to hold it and let it pay me the 2% dividend, and over time it'll probably keep growing. But the way you balance is, maybe over 4 or 5 years you go heavily into rentals, and then after that you're just adding 1 or 2 per year depending on what the opportunity is. And like right now I'm going heavily into crypto. So as my crypto grows, that gives me more balance in my portfolio, because then I have rentals, stocks, these businesses, and crypto. So I would not say that you go balanced into a portfolio. I would say that you invest in the asset that's the right asset to invest in for the time that you're investing. And so this was like 2011 I started. Okay, 2011, 2012, 2013, great years. 2019 I ran into a deal. Stocks pretty high right now. So when it crashed in 2020, I bought my core holdings. I know the values. Another video I talk about understanding the value of assets, and so those are going to be very, very specific. So I know certain neighborhoods in Rogers, certain neighborhoods in Lee Summit, the value of VIG, the value of Home Depot, somewhat the value of Walmart. Sports Closeout, I know the value of those things. So you start knowing different asset values, Bitcoin, Ethereum, by experimenting on things. And so I run a lot of different experiments, a lot of different things to learn, perspective, and what things feel like, so that when Bitcoin dips or Ethereum dips, I know what I would buy that. What price would I buy Home Depot stock at? Am I ready for that? Getting ready for that? What price do I buy houses at? And those prices, that thinking is the same, but the prices change all the time. I'm buying a house in Rogers right now, and it was listed at a price that would have been high, 9 months ago. But I look to buy a house at a price it'll sell for in a week. Now, if you list a house, for sale, and it sells in less than a week, you probably listed the house too low. It is a fact. And so I'm looking for that price. And if I can come in and give somebody exactly what they want as far as a price, and no contingencies, a lot of times I can get a deal on a house and buy it for less than what someone else would buy it for. And that puts me in at what I would call a margin of safety. I'm always looking for a margin of safety. That's one of the concepts I learned at the Buffett meetings that I've been to list about investing. So I just want to take a few minutes this morning, and I wanted to, share with you the things that I invest in, a little bit about why, some of the ways I got into those, and how it happened over time. I didn't just go out and say, I'm going to buy a rental house. I went out and I prepared myself to buy an asset, to buy an investment. So I have some cash, and I have some passive income to cover risks, and I have the mindset I'm trying to build to understand what investment is, and then I step into the investment. I happen to see it on Facebook, and so then I see it, I recognize it, because I've been thinking about what an investment is and learning about that, and because I have the cash, I have the risk tolerance, and I have the mindset, I go and execute upon, that. And that's really what it's about. Like, I didn't ever go out and say, I really want to buy a house, and go to market and just buy a house. I didn't do that. And I didn't do that about Bitcoin and crypto. Recently, Bitcoin and crypto, I bought Bitcoin on PayPal, I learned you didn't own the tokens, so I sold that. I didn't like it. I bought it on Coinbase at higher fees. So I went through a process of learning about how it works. What I like about crypto is I like basically buying something that probably is going to go up in value. I don't care the risk, as long as the risk is lower than the probability that it goes up. I like getting paid, so keeping it on a Celsius or a Nexo IO is incredible feeling, and those two things make it really, to me, worth the investment and the time. Now, what I'm looking at now is I'm thinking to myself, if Celsius is paying me 6.2% on this Bitcoin, how are they making 10, right? And how do I experiment into that? Is that this, staking like Solana does, or is there another type of a DeFi use for Bitcoin, Ethereum, and those cryptos that creates a higher return that those Celsius, Nexo, IO, those places are actually taking advantage of to make a higher percent on their money? And that's kind of what I want to move into, is understand those things. I have some other videos on that you can check out. But like and subscribe. Let me know what you think. Maybe comment down below. Feedback's always good. Thanks for tuning in. Bye.